What up, people? It's After Hours Investing with your hosts, Michael and...
Chris.
Oh, yeah, baby. It's February 14th. Let's get right into it. We had some inflation numbers come in today. Oh, this is the non-farm payrolls. My apologies. So we were pretty confident that we were going to hit our forecast today. And honestly, I was really confident we were going to pass it. Apparently, I can just go fuck myself, though, because it hit 6.4% today. And we saw that pretty heavily reflected this morning. But, SPY was really volatile today. We'll get into that in a second. I want to look at our fear and greed index. Just earlier, this was at a 72. It pushed up to a 73. That's increased, 3 points from yesterday's 70. So, market's getting a little greedier. But, this really is just showing that we're continuing this bull run. And, the bulls have a lot of power right now. Even with these numbers failing to hit forecast, there was a little bit of a finesse this morning with SPY. And like I said, we'll get to that. And our 3-minute gap filled. So I must have a crystal ball. Chris and I got a crystal ball, actually. We've actually just not told you guys that we're actually, we can see the future. So stick with us. We got you. Chris, you want to take it away? You had some quotes, some thoughts.
Yeah, so we got Fed Williams saying that year-end federal funds rate of between 5% and 5.5 appears reasonable, and he also thinks that Fed Williams thinks that recent data supports the case for additional rate hikes, which just means we're just going to get more rate hikes, and that does make the markets go volatile. I do think they're going to keep it consistent with a 0.25 rate hike, nothing too over the top like a 0.5, unless the next inflation report is like way higher than expected for forecast. Then yeah, we could 0.5 could be on the table. As of now, I don't think we're gonna get that. Our next Fed rate decision, I think, is in March 22nd, I believe.
Yes, sir.
And so we have a long ways away. CPI today, my worst case scenario was a 6.3. We ended up going to 6.4. So I was a little bit not on target, but nonetheless, I do think we're gonna continue this bull trend. I don't think it's gonna stop anytime soon. We did falter a bit today. We had a very volatile day, as Michael stated. I do still think that bullish plays are the play right now. I don't think puts are the way to make money right now. I do see bulls stepping up. I do think we're gonna fill that gap potentially this week.
You want to talk about this 3-minute gap as well?
Yeah, so this 3-minute gap, if you zoom out and you see that we hit that, or Michael, you can explain this better, right?
Oh, yeah, I got it. So, like Chris said, I think on the Nordstrom episode with the Ryan Cohen gap that's formed, empty space needs to be filled. So we had this gap up, or this gap. It was actually a gap down. I was actually under the impression this was the 3-minute gap. Maybe I'm tripping. Wait, let me see. Am I having an aneurysm, Chris, or is this? Oh, no. Okay. All right. I'm tripping. I'm so sorry, folks. So, yes, we have our 3-minute gap right here formed on February the 8th. This was something I noticed on the 3-minute. You can't really see it on the daily. This gap formed. We had, the market really tanked a little bit, nearing the end of last week. And then at the start of this week, we started seeing some upside. And then today, with our CPI numbers, we had a gap down that got immediately filled and just pushed through, filled up our 3-minute gap exactly. And then, little ticky, a little over, a little twinkle over the line and just tanked right back down. And now we're just, tickling the bottom of it. So it really looks like, the bulls got it way under control. And I could see this gap filling again. And I'm pretty sure I brought it over to my daily, not yet here, just so we can see both gaps that we need to fill, because there was a gap before on the daily that still hasn't been filled, and that's the one right here, our upside gap. And it looks like TradingView wants me to go fuck myself because it's not showing the 3-minute gaps. But we did fill that gap today. And like I said, we got a crystal ball over here. We're ahead of the curve. Chris, you want to talk about DXY Vix?
Yeah, so DXY, we seem like we've consolidated it here a bit. I do want to report though that if DXY does go up, we have a chance that SPY will potentially inverse and go down. It's just how the dollar works most of the time. If the dollar's up, then the SPY is usually down and stocks are down. So if the dollar's down and we consolidate here for a bit, I don't think this will be an area of concern. But if we do get a move up, I would be concerned. As far as the VIX seems like it's pulled back a bit, and it's pulled back pretty aggressively even with today's volatility. It seems like we might actually go back down to the 17 line of support if we keep, chugging along with this bull trend. The VIX just seems a bit undervalued, I'd say. I would pick up calls, just not yet. I think we do have to fill that gap for SPY, and then I would start considering buying long-term, monthly, maybe 3 to 4 months out for these calls. As far as Lyft, you want to cover that today, Michael?
No, take it away. I'll talk about Exxon.
So Lyft today, we saw a little bit of green. So it seems like could you zoom in real quick? We saw a little bit of green, so we're not yet touching that gap. I do expect this to eventually fill the gap. I think it'll take some time though, maybe possibly 2 months, or 3. I think would be a good guesstimate to this gap filling, because we do have to close that space, and it would be a good position. Right now, the RSI is at 32, so I mean, you're still very early if you still want to pick up calls. If we do get a pull back on Lyft tomorrow or this week, I would start entering calls, and this could be a really good play. Michael, do you want to cover anything?
Yeah, so ExxonMobil starting to go down. I caught some news. It looks like the Biden administration's, I assume in the pursuit of bringing down the cost of gas, is planning on selling, I think, 22 barrels of oil, which honestly isn't awful because, the price of oil is very inflated right now. So,
22 million,
they'll
right?
22 million barrels. My apologies. And it looks like oil is very inflated right now. I mean, it doesn't look like. We know for a fact that, ExxonMobil has been bussing, because people need gas. They got to, daddy's got to get to work. So, it's slowed down a little bit. Can't really say for sure, but, based on the news, the Biden administration is trying to, it looks like, flood the market with their oil reserves to maybe increase supply, lower demand, and bring that price down. In terms of whether it's still a good investment, I mean, like I said, Russia's not planning on stopping anytime soon as far as we see. So I really can't say for sure, but I'm still fairly confident that Exxon's got some, more roots to grow. So, if you're on a call, if you've been on a call on Exxon or bought shares, maybe now's a good time to sell based on the news. But, in terms of like entry, that's something that I would be a little bit wary of, just based on, but headlines aren't anything. The market is, human perception and human beings being fucking weird like usual. So you don't really got to worry about it. China, still on its little bull run. They reopened their economy. They're doing really great. They had a little bit going down. I don't really know what's going on in China. I actually don't really keep up a lot with China news. But I still think they opened up their economy. They're very, very undervalued for the present year. So I think it's a good time to get in on China if you're looking for something really long term. Pacific Gas and Electric, same thing as Exxon, just not to that same degree because Exxon's got that monopoly going on. SLI, Standard Lithium, like we said, Chris and I were looking at some long term plays. We think lithium's going to be a pretty good one. In 2024 is when the scarcity of lithium is going to really, weigh down on producers. So, we'll see that reflected, on consumers as well. And those prices will probably skyrocket. I'm curious whether or not Elon's got a plan for that. I assume it has to do with Teslas with solar panels on top. Maybe he's already done that, announced it, and I just, I'm not up to date. Meme stocks, AMC, BBY looks like they're down, some percentage, some pretty nifty percentage, and of course, Bed Bath and Beyond. We know that they're really tinkering on the verge of bankruptcy. So maybe I would avoid this like the plague. Nordstrom had their downside gap. It looks like once the gap's filled, a pattern we've been seeing recently is if it's a downside gap, if it fills, they bounces off. If it's an upside gap, if it fills, it bounces off. This is just a pattern I've noticed. And it looks like it's still holding up here. And I feel like we might see the same thing with Lyft, although I personally think this might be filled a little bit faster than a couple months, Chris. But we really won't know for sure. But I could definitely see with the direction that the market's going, that we'll definitely drink up some of this gap for sure. GameStop, Lucid, doing its thing. You never really know with these meme stocks. They're in perpetual short squeezes, but it doesn't look like a wave is forming. It's kind of consolidated. This might be like the bust that's about to come. But like I said, the humans are weird. Chris, you want to talk about the powerhouses?
Yeah, Tesla was really surprising today. It just followed the markets. It ran up 7% today. I did say to grab 150 puts. I would say those are still a good play, but as we do go up in this market, I think Tesla will follow. Um, so I would say either you can average down or you could possibly ride calls alongside on Tesla that would fix your issue on losing values on your puts. But I mean, like, just look at this overbought RSI. Like, it's ridiculous. Like, what is it at, Michael?
Dude, it's at 71, bro.
It's
And
at
I have no idea.
71. Like, this has got to calm down.
He's got like a CIA supercomputer in there and he's just toying with the market right now. I really don't understand. There's like I've not seen any news. I don't know it. His workers in New York are unionizing against him because the conditions are bad. Because Elon is literally a robot that can work 24 hours a day and normal people can't. So it's I have no idea what the hell's going on, but he's killing it.
Yeah, but as I've stated, if the market goes up this week, you could just buy calls to offset the puts I told you to get. If you did get those puts, I still think those puts are pretty good in value because we do have that downside gap. And once we start a new downside trend, I think Tesla will gladly follow that trend downwards. Um, but yeah, Microsoft, Apple, they seem like they went pretty flat today with this volatility. Disney seems pretty flat today too. They sold off a lot. That's mainly because they were kind of correcting off their RSI. Um, as far as an entry here, I do see it that there's a lot of buys. I would potentially just cool off here, see if we can go maybe a couple more dollars down, and then yeah, I wouldn't really touch Disney here, but we could see it go up with the float of the market this week if we do get to fill that gap as I've mentioned. Um You have a crypto to mention, Michael?
Yes, I do. Coinbase actually thriving today, following the general flow of the market, even though, SPY tanked and it says it's under right now. This is post market. It actually closed in the positive, not by a lot. So I do find it interesting that Coinbase is up. But, Bitcoin's been busting and therefore Ethereum. And when Ethereum's busting, so is my fucking love child, Ethereum Classic. People, if you're gonna buy Ethereum, you might as well buy Ethereum Classic. I say it all the time. It's not financial advice, but I mean, holy shit. When Ethereum goes up 3%, Ethereum Classic goes up 2%, and you're still making more money because the shares are less. I mean, they're not really shares, they're coins, but you can buy more Ethereum Classic because it costs less. So you will be making more money per percent. It's just like, I just think Ethereum Classic is just busting all the time. I love it. It's my baby. It started me off on Coinbase, my first ever L I took. It's the biggest L I've ever taken in my life, and it stuck with me. It was with Ethereum Classic, and it wasn't even like I lost money. Let me see. I think it was around. It was like a couple of years ago. Yeah, it was around where it was down like $8, and I bought it. It shot up to like 15. Me and my friend were like, "Holy shit, we made so much money," and we sold. And oh, it stings, doesn't it? But that's what you learn. And you know what? We still got a profit. So, glass half full, even though it's a little bit room temperature. Chris, you got any concluding thoughts, my friend?
Yeah, I mean, Michael's a really empathetic guy. He really likes to state that. Um, every time he loses, he wants you to know, like, hey, man, you can still do it. You can still win.
I care,
He,
people. I really
yeah,
do. It's a
he really
curse,
does care.
I call it. As Chris knows, as I get made fun of, I call it a curse.
And just one thing before we conclude this video, Fed Williams said something that makes me a bit of area of concern. He said it will take several years to get inflation back to 2%. Um, I don't know, because if we do, if he's saying that, that could be a giant red flag on the economy slowing down.
Well, you guys, this has been your news update for February 14th. It's Tuesday. We got our CPI numbers. Shit was wildin'. Market's volatile, but it looks like the bulls are, still, what's it called? Stampeding. So, thanks for watching, and y'all have a wonderful rest of your day.